Most people think crypto is just about trading coins, but the truth is something much bigger is happening behind the scenes. Our guest today has actually helped build three different generations of money. He started in traditional finance at Merrill Lynch, then helped build digital payments during the early days of Venmo, and then he helped lead Coinbase across Southeast Asia, one of the biggest and fastest growing crypto regions in the world. And here's the crazy part. Some people believe stablecoins might soon make sending money as easy as sending a text.
Yeah, and that's the stuff most people don't see. Everyone focuses on Bitcoin's prices, but there are people quietly building the financial rails of the future, and Hassan is one of those people.
Hassan Ahmed is the country director for Coinbase Singapore, where he leads strategy across Southeast Asia. Before joining Coinbase, he helped scale fintech and crypto companies like Venmo, eToro, Coins.ph in the Philippines. So today we're diving into how crypto is actually being used around the world, why stablecoins could reshape global payments, what banks still misunderstand about crypto, how AI and crypto might intersect in ways that sound a bit sci-fi, and how money is going to look like in 20 years from now. Hassan, welcome to Dad's Gone Crypto.
Wonderful. Great to be here.
Thanks for coming on. It's great to have you.
Awesome. And let's jump into it. So, Hassan, when we look at your career, it's almost like you've lived through three different financial eras. You started in traditional finance, then moved to fintech payments, and now into crypto infrastructure. Was there a specific moment when you realized crypto wasn't just another fintech trend, but something fundamentally different?
Yeah, it certainly has been a really fun ride along the way. And the way I like to think about it is that I've gone further ahead on the degen risk curve as I've progressed in my career. With fintech, when I was at Venmo, that was a very exciting time. It had just been acquired by PayPal. And we were sort of in these early days of scaling up the product. The product was growing like a wildfire. Like every year, every month or so, we would be doubling the number of users on platform, and it all felt very revolutionary at the time. But the more I dug into it, the more I realized that even though the UX, the user experience, was really magical and frictionless, on the back end, nothing was really changing. It was still the same old, banks that we were building on top of. It was still the same old legacy plumbing, operational, headaches, a lot of kind of batch files moving back and forth when ultimately the settlement was being done. And so that gave me a glimpse into just this insight that actually fintech is a lot of fun, but it feels incremental. It's not in some ways truly revolutionary, even though it's done a lot of good in the world. So when I came across the Bitcoin white paper back in 2013, that sort of seeded this idea that, hey, there's this new kind of technology that's evolving. It's starting to kind of take root, and it has this inkling of true peer-to-peer payments that are not intermediated, can really be truly conducted by two parties with a value transfer with a protocol that prevents this double spend problem, that had been plaguing the specific area of research for a long, long time. And so at that time, it was still very Wild West. But I think I just understood just enough about that white paper that I started falling down into the rabbit hole. And as I had more conversations and I sort of explored the area, I realized that there would be a time that this would start maturing, and there was line of sight to have it meet the modern financial infrastructure and ultimately disrupt it.
Yeah, absolutely. So you headed up then the transition of bringing Venmo into digital currency. Is that correct?
Well, Venmo at that time was not ready.
Okay.
Neither was Uncle PayPal, as we used to call it.
Right. Okay.
After the acquisition. But if you look at PayPal today, they have their own stablecoins, and Venmo has added crypto trading and everything.
Right.
But at that time, this was when I was in New York. I don't know if you've had a chance to go to this place called the New York Bitcoin Center, which is ironically in Wall Street, next to the old Deutsche Bank building. And back in 2013, like that's where, us kind of weirdos and, idiosyncratic folks would hang out and, talk about these libertarian ideals of, what could this technology ultimately blossom into. So it was really kind of a liberated and fun time where you could just let your imagination run wild. But certainly, big platforms, regulated platforms in particular, were not ready at the time.
Okay. So while you were at Venmo, did you kind of see Bitcoin as like that border crossing currency that Venmo couldn't actually compete with?
Yeah, in some ways. So we had started doing these kind of test transactions, amongst sort of the community, and they were, geographically agnostic. So crossing borders was, just sort of a feature that came along with it. And so I think that sparked these ideas of, this was going to get interesting. But you also have to remember that because Bitcoin, is volatile in price, the true kind of utility of it wasn't really coming out. A lot of people were sort of thinking about it maybe in different ways. And even today, most of the thesis is around it being digital gold and a macro asset. And so I think it wasn't until stablecoins really started breaking through that you started to see, where this was actually headed. And, stablecoins could just, zero in on that kind of true utility without exposing sender or recipient to the price volatility that would take away from the commerce and value transfer nature of it.
Oh, makes sense.
Hassan, we're gonna put your skills to the test. All right. So let's just say you are stuck in an elevator and one of the crypto dads comes up to you and says, "Can you explain Bitcoin in 30 seconds?" What would you say to him?
Yeah, well, depending on how long the elevator is stuck for. But I think the opener or the easy one is that it's, truly internet native digital money. I think, and the analogy is, it makes sending money as easy as sending an email or a text message. I think that's something that people, understand. And, I think calling it like the internet of money, I think is an easy moniker as well. But I think that's how generally kind of I start and try to have people like understand what it means. I think another kind of layer on this whole thing is, if someone says, well, but there's e-money or like fintech, and generally then I'll say yes, but that's like taking like an analog photograph and then photocopying and uploading a scan to the internet. Whereas with cryptocurrency, it's something that is truly internet and digital native and moves around that way.
Yeah. Right. Yeah, absolutely. So have you ever had one of those crazy moments where you're trying to explain it, to a family friend or, to somebody in your family, and then you just realize how totally misunderstood everybody is about Bitcoin?
Oh my gosh. Yeah. You can imagine, over like 10, 11 years, like how many of these scenarios have come up. I think, starting with, USDC, frankly, has made my job a little easier because then you can just sort of focus on, what does cross-border value transfer instant settlement, look like and why that's important. And then you can, talk about crypto native assets like Bitcoin and others, I think in a different kind of way. But one of the things with this sort of industry and perceptions and all of that is that, price action sort of tends to be content marketing in this industry sometimes. And then, these headlines really shadow, I think, or overtake the true kind of fundamental, utility and kind of technological breakthrough. So that tends to be a little difficult sometimes to get someone to stop focusing on the price, even though, the appreciation has been important. But also, be able to appreciate what a true, R&D computer science breakthrough this is, and why it's so transformative.
Yeah, absolutely.
Yeah, I think I just had it this week. It's like one of my friends asked me, "So how's it going in crypto?" I was like, it's my perfect opportunity. And then you go off on a tangent. You say, "Oh, we're doing this and this," and then they look at you as if their eyes are crossed. They're like, "I got no clue what you just said." You're like, "Oh, this is a bit awkward."
Yeah.
Anyways, so how was your day?
And I always get Bitcoin's down. How are you coping? It's like, dude, come on, it's not so bad.
We're fine.
Yeah. At Coinbase, like Brian has this great saying that I really believe by is, it's never as good as it seems and it's never as bad as it seems. And I think
Yeah,
for those of us that have been through the cycles at this point, that that when things might seem down, that's actually a great time for putting your head down and building, and just ignoring the noise and focusing on refining kind of products for your users. What's also nice about bear markets sometimes is that all the tourists tend to leave. Maybe folks who are attracted for different reasons. They tend to not stick around as much. I feel like with every cycle, there's a little bit of trial by fire, and then the people who kind of really, subscribe to the technology, they stick around.
Yeah, agree completely there. It's a nice washout sometimes.
Yeah.
Right.
So Hassan, your background is really interesting, and you've worked both in the US and now obviously Southeast Asia. From your Coinbase seat, right? What does the global crypto market adoption curve actually look like today?
Yeah. So at Coinbase, we're fortunate that we're a global crypto company, and we have different kinds of products. We have our exchange, we have custody infrastructure, we also have our regulated services, and then we have Base as well, which is sort of a layer two blockchain, and then we're across all of these different markets. So what I tell people is, one of the most exciting things about working at Coinbase is that you have this front row, unfettered view into almost everything that's going across, the industry around the world. So really kind of privileged to sit here and help sort of build this industry along as well. Um, in terms of how sort of this maturation is progressing, I think there's a kind of few key things that stand out. One is just that for the longest time, it was mostly a bottoms up, retail consumer led technological revolution. I think as of 2 years ago, I would say that's at least for this season, it's flipped. It has been very much an institutionally led cycle. We've seen announcement after announcement, BlackRock, JP Morgan, Citi, Stripe, and so on, announcing their plans around digital assets or stablecoins and trading and whatnot. And so we're seeing that market structure change as well. A lot of the, call it like hot money, is cooling down in some ways, and it's transforming into patient capital, institutional long-term capital that really has just these long time horizons, and has a different kind of conviction into this asset class. So I think which shows up in some of like Bitcoin's volatility as well, which is it used to be implied volatility used to be in the kind of 120s, 160s, and now it's closer to like the 40s, which is about like a high growth tech stock. I think that the second kind of big thing is that this is truly like a global technology and a global phenomena. In the US, I was fortunate to sort of see a lot of that, uprising over there. But it really wasn't until I moved to Southeast Asia that I saw that so much of the beating heart of crypto is truly in Asia. The different countries have taken to different parts of the crypto cycle. Some of them are call it like degen traders. Some of them are very kind of DeFi forward. Some of them are we're into Web3 gaming last cycle. But I think it's just overall a young population. They're very tech forward. They're not afraid to try new things. And so, and there's just been a lack of kind of financial infrastructure in many ways. So this crypto and stablecoins have provided a solution to them for a problem that they've long been having. The Asia part of the story is also very, very exciting. I think it's much more well understood in the last few years than maybe it used to be. But I think people understand that, call it like America and North America have their own dynamics, EU has their own dynamics, and APAC has their own dynamics as well.
And Hassan, just a follow-up question there from your point of view and Coinbase's point of view, how soon do you think crypto will go mainstream in Asia? How many years are we away, or I wouldn't say months, but definitely years are we away from that full-on adoption where it's accepted and people are just building and just carrying on in this space like any other?
Yeah, I think we're very close in some ways. So one of the big enablers, around digital assets is regulations. And I think what, especially when I was living in the US, I didn't appreciate this so much, but many countries in Asia have had regulatory frameworks for a long time. So Singapore announced its framework in 2019. Philippines has had one since 2020. I think Thailand has had something as early as 2017. Whereas in the US, we're just getting around to Genius Act and then Clarity Act now. So many of these markets provided clear rules of the road for homegrown exchanges and homegrown like DeFi projects and protocols to get started without kind of fear of like regulation by enforcement or anything like that. So I think that's one big advantage that Asia has had for some time. I think that the second sort of key thing that I see in terms of adoption is in Singapore, for example, like our adoption rates are close to 40%. So they're really kind of further along the adoption curve. Other bigger markets like Indonesia, which is about like 270 million people, that is roughly at like around like 22% now. And other countries are also at similar scales. So they're starting to get into that late. They're crossing the chasm from like early adopters to that middle of the curve. And
Okay.
where this needs to go after this is that I do think we will hit this tipping point where people will not really be interested in figuring out like what is the technology. They just want the thing to work, and they just want to get the utility, whether it's speculation or trading, or it's sort of payments or value transfer. And I'd say probably another 2 to 3 years. We've already seen some big announcements from big banks and platforms here, but I think the technology has come far enough that especially with stablecoins taking off too, that we're going to see a very vibrant payments, stablecoin-led payment scene across Asia. And then capital markets, I think tends to be stronger in the US. I think we're going to wait for tokenization to take off there. But payments, I think, will be led by Asia.
Oh, so I didn't realize Asia had so many countries in Asia had already put in regulations like that, and stabilized things so much earlier. Here in the West, we for years we've been thinking of crypto as the wild West, as you said before. It's just speculation and trading. But over there, it sounds like you've already got payment rails and financial access for everybody already in the crypto space. Is that the case?
Yeah. For most of the countries, they've been more progressive in their regulatory stance. There's other big countries like India that are now starting their journey. So I do think there's still some parts of the continent that are still coming online. But Southeast Asia in particular, has been much further along, along with, I'd say, Japan and Korea.
Aside from a technology point of view and an advantage point of view, what advantage has Asia had in having this in this regulation in place sooner? Obviously, in the West, they're still trying to get all their paperwork in order so they can work towards a framework which doesn't allow them to get sued or their company to be taken away. So that's obviously stifled growth and innovation because they just don't know the rules in which they can play. But Asia's had the rule book for now 4 or 5 years. So what advantage has Asia got over the West from a innovation point of view and maybe a technological leap point of view? Because 5 years is a long time from an innovation point of view.
Yeah. I think different countries and different parts of Asia have had like different flavors of crypto innovation, I'd say. So in Singapore, one of the reasons why even Coinbase decided to set up shop in Singapore is one, it's just it's a business friendly hub, it's a financial hub, and then for crypto in particular, as I mentioned, they were early to the game in setting up a licensing framework. So for exchanges and platforms like ours, it's extremely important because that's we're playing the long game. We want to be trusted and compliant. And so, with this understanding that there were going to be clear rules of the road in Singapore on how to operate, which will also allow us to get banking rails and provide a kind of best-in-class scaled experience, that gave us the conviction that we can make a lot of investments into Singapore and we can really grow this out as our hub. And so there's all these ancillary benefits that countries get as well. So Singapore is not just our kind of commercial hub; it's also become an engineering hub as well. So we've hired a lot of engineers and product managers, designers into Singapore. So these countries also understand that there's a lot of like job creation that comes with it. There's like FDI inflows that come with all of this as well. I think what I would say is like if you sort of go around like the map a little bit, Korea is probably the one of the interesting ones. Like it has been kind of long like a home of like retail trading, retail spot trading in particular. Some of it is just cultural. Some of it is again there was just these kind of big exchanges over there that were homegrown. And had provided kind of the necessary infrastructure to go and to provide these services. One of the really fun stories from last cycle in Southeast Asia is Web3 gaming. So at that time I was heading up a crypto exchange in the Philippines. Just happened to be at the right place at the right time. And so if you remember like Axie Infinity, so what was going on was Vietnam was kind of building these Web3 games and Philippines was consuming these Web3 games. And so there was just so much like interesting kind of energy, where really kind of just, everyday people were playing this game, earning tokens, and then watching their tokens kind of go up in value. And I was running my own kind of gaming guild at that time too, just to kind of stay close to the metal. And so these players, they would redeem them, and you would just see like, just kind of everyday stories of people like, maybe buying like a new car for their dad, or like, paying off like hospital bills for a family member, or getting married. So it was quite, it was quite interesting, to see those human stories as well, of actually people kind of benefiting and pulling themselves.
Life-changing scenarios.
Yeah, and in ways that they just wouldn't have gotten those economic opportunities. Otherwise it's just hard to kind of progress in some of these societies. So we've had like a lot of like different kinds of stories. I think the last thing I'll just mention is because Asia has so many countries and so many currencies, it also has a very vibrant cross-border payments and remittances market. And so that's been something that's been true for a long time. And what's happened is that stablecoins have become extremely popular, both in Asia as well as I would say like South America and kind of sub-Saharan Africa. So there's like this kind of global South story of stablecoins that I think isn't told as much in the West, where so much of the circulation happens between, could be like mainland China suppliers, and getting paid in stablecoins, or cross-border Southeast Asia e-commerce. Maybe someone's kind of making jewelry in the Philippines, and there's a Singaporean buyer, or just small kind of payments that sort of go across these markets. There's this concept of like a stablecoin sandwich, where it could be your local currency, you convert it to stablecoin, and then you off ramp it back into the third, like second local currency. But what I've actually observed is that people are I forget what the right word is, but maybe like an open sandwich, like a Belgian sandwich or something. So the sender is converting from their local currency, on ramping into stablecoins like USDC, but the recipient is not off ramping it anymore. So it could be that maybe their local currency is less stable, or the circular economy, within stablecoins and crypto is now just getting so vibrant that they know that for their supply chain, eventually they're going to have to pay in stables anyway. So they're choosing to just keep all or a portion of their stablecoins, on chain. So that I think is very exciting and very interesting. That I think is going to play out in the next 2 years as well.
Yeah, that is very interesting. So is Coinbase specifically tailoring products for Southeast Asia, maybe in a different way than for the West? Is that what you're finding?
Yeah, at a high level, what we try to do is, for markets that we've identified that we want to be, call it like number one, number two in, we will then sort of really kind of go deep on those markets. We'll have a local entity, we'll get a local license, we'll have a local banking partner, and then we'll start localizing and tailoring our experience for that population as well. So in Singapore, we support SGD, like Sing dollar, on ramping, off ramping. We actually support USD as well. But one of the more interesting things we've done is we've started supporting local stablecoins. So Singapore has this one called XSGD. Australia has one called AUDD. So we work with their issuers to start supporting them on our platform. And now you can go one for one SGD to XSGD with the intent that as more utility and more payments go on chain, people will need that functionality to be able to cross FX and eventually just do it on chain as part of like an atomic transaction. without having to touch fiat and kind of get that friction in the works again.
Wow, that's really interesting.
Does the stable coins are they the companies that obviously issue the stable coins, are they backed by a one-to-one? Do they have a treasury? Because obviously it's stable coins is the next flavor, right? And people that are getting into crypto are saying, all right, but there's so many different types of stable coins. How do I know which one to choose? And it's not going to devalue by 50% overnight.
We do a lot of diligence on all the partners we work with, but especially for stablecoin partners. So we are fortunate that stablecoin licensing frameworks, just like the Genius Act, are also starting to pop up in different jurisdictions in Asia as well. So the one that we work with in Singapore, they're called StraightSex. They will be getting the Singapore license effectively for stablecoins. And the principles are the same in terms of the risks that are being addressed, with Genius or Mika or the stablecoin license over here. The idea is that you have to have reserves one for one. The reserves must be in high quality liquid assets, so that they can't be in something that's you can't have like a duration mismatch. You have to have attestation of reserves, and you need to be able to honor redemptions in like a timely fashion, like 24 or 48 hours.
Okay.
So those are the principles that we think really kind of address the systemic risks that maybe existed in the last cycle, and also just another sign that the industry is maturing around their thinking on this.
Does Coinbase, let's just say, for whatever reason, a backed stablecoin goes a bit wonky, right? Does Coinbase offer any insurance on a client's assets, or is it purely on the client's risk?
Yeah, well, being sort of regulated in different jurisdictions, that provides a lot of trust in terms of the protections that we're obligated to offer. So one of the protections that we have in Singapore, for example, is this concept of safeguarding. So when clients deposit funds with us, we have to put them in safeguarding accounts and segregate it from our operational funds, which means that even in the case of insolvency, client funds are not like subject to kind of bankruptcy proceedings. They would be sort of for the benefit or in the name of clients, and so they could get those redemptions. I think beyond that, we do have some kind of insurance protections, but the insurance side of the industry depends on the underwriters and specific scenarios that they would cover, just as with any insurance. So those kind of get into the weeds a little bit.
Okay.
So Hassan, you've worked with payments at Venmo, and with your Venmo background and now Coinbase, how do stablecoins challenge SWIFT? Is there any bold timeline for when they could dominate cross-border payments?
Yeah, that's a great question. So the way I think about this is there's I think old A16Z saying of, are the incumbents going to find innovation first, or are the startups going to find distribution first? And interestingly, what's happening, at least in my view, is that the incumbents are moving faster than people have expected, especially kind of post Genius, now that there is a lot of regulatory unlock. Not just banks, but even SWIFT has started to look at blockchain, very, very seriously. Actually, they've been looking at it for a few years, because I think ultimately they also recognize that correspondent banking is very ossified. It's very clunky, especially for sometimes when you have to do transfers in Asia or some of these long tail corridors. It could be as many as 4 to 6 hops, in the transaction. So this is one of those cases where I would say that I don't think that SWIFT is going away. That might be a controversial statement, but I actually think that as we think about how blockchains and stablecoins are seeping into mainstream finance, they're actually upgrading the financial system, and some of these players have been pretty quick to the draw. Not just SWIFT, but even if you look at the card networks like Visa, MasterCard, and so on, they're making a lot of progress, and they've staffed like real teams. This is not like pilot stuff anymore. So what I expect is, if you think about like payments as a supply chain, I do think that many of these players will evolve. they will add stablecoins as a payment method, into their systems, and eventually, sort of seep down into their accounting systems of record. I still think that there's some more work to be done beyond kind of core regulations around things like tax treatment, other kinds of, issues like prudential, regulations, from Basel and whatnot. But all of that is being worked on with good intent. And I think that is what is going to give the clarity and allow this technology to propagate in a way that just hadn't happened in the last 7 years.
Hassan, I saw something, and I think it was on X or one of the posts. You mentioned something about AI agents could basically hold USDC, in their wallets and then interact with it. It does sound a bit science fictiony, all right? But how could something like this actually change payments, like in the real world?
Yeah, that's a great pickup. So think about this as being at the edge of these two massive technology waves, AI and crypto, and how they're intersecting with each other. And since you guys are in the trenches as well, that people have been fiddling with different ideas, for how AI and crypto could intersect. So there were ideas around like, oh, maybe you take a photo and there's like a cryptographic proof, that you post on the blockchain that this was not like a fake photo or AI generated, or like with BitTensor and decentralized GPUs and whatnot. I think this flavor of sort of the experimentation, feels like it's really taking root, which is now that AI agents have become much more expressive, much more capable than maybe was even the case like 3-6 months ago. What people are looking at is, okay, so now before I was just, chatting with ChatGPT and whatnot. Now I can ask my agent to maybe go do things like, maybe post on WhatsApp or Telegram on my behalf, or, track action items and even try to close them out. The next progression from here is going to be, okay, how do I empower, my AI agent as an economic actor to actually go do, secure resources and, be actually able to pay for things. A trivial but in some ways canonical example is resources that are gated by APIs. So like, let's say like you want to get like weather.com's like kind of business subscription for like a more detailed weather report. So today what you have to do is you have to actually go sign up, you have to create credentials, you have to get your API keys, and then you have to attach like a payment method like a card or something. But what AI agents can do is they can just sort of go under the hood, and if you had a way for them to pay for that resource on a per usage basis, you could just kind of do the whole thing programmatically, and you could even run like micropayments. So that's where agentic commerce and agentic payments really has taken root and started coming in. Coinbase developed this protocol called X402 last year, which is basically it's a spec for how agents can talk to each other around payments, and then it also cleverly hooks into the existing fabric of HTTP. With this 402 is a reference to this error code saying payment not found. So it actually links into that specific kind of call, and then allows for the payment to be interoperable with existing web pages today. So we're seeing a lot of builders use X402. They're combining it with this thing called EIP 8004, which is around like agent reputation. And then they might use Google's kind of 808 framework or something else to create this kind of holistic experience where agents are going and they're just kind of buying things autonomously. So that's where USDC also comes in, with the fact that if you want to give your agent money, it's kind of like giving your teenager a credit card. You don't want to do that.
No.
They're probably going to go rogue with it. But one, if you give them a crypto wallet, it's internet native. It can just be generated programmatically and trivially. And then two, if you just fund it with stablecoins, the agent is much more comfortable with being able to transact with stablecoins directly. And then three, you can just control that spend and isolate it in a much more programmable fashion than like payment methods that are really made for humans, not for AI agents.
I think I recently read too. Coinbase is opening up a agentic trading, right? So you can actually allow agent. They're basically allowing agents to trade on the platform now. Is that correct? Or
Uh,
soon? Did I
yeah,
read that correctly?
yeah. We're playing around with like a few different flavors. So one is just kind of basic AI chatbots just to help you
Uh-huh.
navigate like the Coinbase website. The next version of that is what we're calling like an AI advisor, and that's sort of where you can have an AI advisor that has your Coinbase history. Maybe you can like link up other self-custodial wallets as well. So maybe it has your entire kind of balance history on like a read basis. And then third is okay, how do you empower it within guardrails to maybe execute a trading strategy? So they can kind of ingest like the best of the best content and strategies that are out there, and then you put it to work for yourself. It's really fascinating to think about, where it goes from here. Today, obviously, there's a lot of HFT action and a lot of programmatic trading as it happens anyway. I think what this is going to do is this is going to further democratize this whole field, not just for crypto, but active trading in general. And then two, it will in some ways free us up to maybe go do other things than just kind of watch the markets all day long.
Right. Yeah.
Which you could still do if you wanted. But I think it's just a very kind of interesting and exciting area that we're excited to kind of push the boundaries on.
Yeah, it really is. It really is. I can't
Yeah,
wait to have an agent trading for me so I could go hang out at the beach. So
yeah, and they'll
soon.
they'll make money so that you can pay for your beer.
Exactly.
And then on the same theme, so coming back to Singapore, the MAS is the regulator here, but they also have an innovation arm, and they're actually also very involved in all of this and pushing the boundaries. So they have this new call it like a project called Project Bloom, where they've invited like the industry to come and build things on problem statements that they've given out. Coinbase is one of the participants in that, and so we chose to participate on the agentic payments track, for that. So it's something that the MAS is also very interested in. We think that regulators are also, at least the progressive ones, are studying this very carefully because they understand that in the not too distant future, AI agents are just going to be crawling everywhere, and agentic commerce, is becoming real, like almost by the week. So it's something that they want to really collaborate with the industry on look, what could guardrails like such as like know your agent look like? Where does like ultimate liability sit in case of like a chargeback or a dispute? So these are all really open and exciting questions that we're also trying to figure out in real time.
Oh, very cool. So let's switch gears just slightly here and go back to crypto versus banks. Because you've seen both sides of the financial system. You've been in traditional finance, you've been in crypto. So what do you think the banking world still misunderstands most about crypto?
Oh my gosh, where do I begin? I will say that banks have come a long way. I think you still see some, call it like contradictory behavior from different parts of the same bank, because they're not monoliths. But by and large, there's been a lot of top of the house embrace of this technology finally, which is very exciting to see. We have our own infrastructure that we now white label to banks and financial institutions called crypto as a service. So if they want to enable crypto trading, they can just kind of use our infrastructure. But at the same time, there's still a lot of work to be done. I think some of the banks, what we see, are still a little concerned of, hey, there's this big change coming. Am I going to get disrupted? Am I going to have like a flight of my deposits? What does this mean for me? When we're seeing some of those discussions come up in sort of the Clarity Act negotiations as well around like stablecoin rewards. But if you just think about it for a second, like even if you think about the fintechs, in the U.S., many of them offer like best in class kind of savings rates, and that hasn't really disrupted, even community banks for that matter.
Mm-hmm.
So we don't think that that's going to be the case, and many of them are embracing stablecoins anyway. I think that there's still some misconceptions around like the volatility of crypto. I think there's some education around like, okay, look, there's one, there's Bitcoin, and then there's everything else still, and then two, beyond kind of native crypto assets, now you have stablecoins as its own category, and then you have sort of tokenization that's coming for you anyway, because if you talk to the SEC, they have a task force that's looking at tokenization of equities, because they are also very interested to upgrade the capital markets in the US. Make it more 24/7, make it more real-time settlement as opposed to waiting for T+2. So this is going to be happening kind of at the highest levels at this point, and this train is not coming back to the station. So I think the best banks understand that, and they want to be ahead of it, and they understand that they can actually result in these win-win situations.
Yeah, absolutely.
I'm sure you've read the news and keep close ties to the US, but the banks there are really pushing against stable coins, earning yield and, giving the retail sector the freedom that they need to earn more interest and so forth. So there's a lot of pushback. How progressive are the banks in Singapore? Do they kind of follow the same beat as other markets, or do they fall in line with the US markets or maybe another market, or are they beating at their own? Are they progressive are they ahead of the game? That's what I really want to know.
Yeah. There's a dispersion on this. The banking sector in Singapore is just very different from the US. It's much smaller in some ways, but in other ways, it's also just Singapore is an open economy, and so there's just a lot of cross-border flows. So actually in Singapore, the private banking sector is very robust. The number of family offices in Singapore has increased by like 5x, over the last like 3-4 years. So there's different sectors within banking that are more systemically important to Singapore than, let's say, like in the US. All of that said, overall, I'd say that the posture for banks in Singapore is very progressive. They've seen the fintech kind of wave come and go, and now they see kind of blockchain and stablecoins as like the next big thing. So there are banks that have their own kind of, call it like digital asset exchange, that they then externalize to their customers within wealth management units. It's just that there's just so much client demand, especially in Asia, for holding digital assets and crypto, that they have either had to, figure out like a custody solution at a minimum, or have some sort of a referral arrangement, so that their clients can see all of their like portfolio balances in one place. And now we're seeing, a lot of that action shift over to their payments units. So they're trying to figure out, hey, like, I have this kind of merchant base, that because they do payments aggregation as well. They just want to accept, SGD, and they want to settle in SGD. But if I've got buyers on the other side that want to pay in stablecoin, how do I, help kind of facilitate that leg so that I don't have to add like additional complexity to these SMEs and businesses? So some of them are starting to kind of really figure out how to take that into production at like national scale, which is also very encouraging to see.
Yeah, so we're already starting to see a lot of big banks experimenting with things like tokenized assets, as you mentioned a couple minutes ago. So in the future, do you think everyday people are going to hold Bitcoin directly, or do you think a lot of people are actually going to allow banks to hold it on their behalf?
Well, by directly, you mean like for self-custodial?
Yeah, like I'm wondering if we're going to see people moving away from self-custodial to more of even, not just people like Coinbase holding it, but actual banks as well.
Yeah, well, the self-custodial side of it, I think, is also really interesting. There's certainly a use case and like a burning or an acute need, in certain situations where, because Bitcoin and other crypto assets are bearer assets, like you want to be able to hold them. If you have to kind of, let's say, like flee borders, or you have to kind of take your wealth with you, there is no easier way to do that autonomously than with Bitcoin. So I do think that is a gift really to so many people around the world, and I think that's going to continue to be the case. I think for the rest of kind of the crypto economy, most of the need for self-custodial that I see is to interact on chain. in an open and permissionless kind of way. So some people are maybe chasing yield, some people are trading on dexes, some people are still figuring out like all the Web3 stuff. So I think that to get like the best version of that experience, that still happens on self-custodial wallets today. And I see that the number of the MAUs around like the number of people on chain is still very healthy and growing. So I think that that's going to continue to be the case. Whether they want to hold it like custodially, in at a Coinbase or like a bank, I think it comes down to preference. Sometimes like even I have like Bitcoin ETF in my 401k. So some of it is just like structural, and so that's how you're going to access it. But you do have to pay fees on ETFs, and so some people just want to be able to hold spot Bitcoin or Ethereum or Solana, and then take it self-custodial when they want to. So that kind of optionality you will get with like a pure crypto platform.
Absolutely. I'm happy to hear a exec from Coinbase spouting the
the decentralized economy.
Yeah, thank you. That's what I was trying to say.
Yeah, I mean, I'm pretty on chain, so I really enjoy messing around with like new protocols, new DeFi applications, seeing kind of what's going on. I think it's a way to just stay sharp and stay at the frontier of kind of what's happening. But two, it's also fun. I mean, if you're going to do this, for many, many years, you better have a lot of fun at your job. Otherwise, like you might as well just be in banking, I guess.
Yeah. Oh, yes, exactly. And that's probably the most boring job in the world.
No comment.
So yeah, it's and I think with us, we're learning all the time on Dave's Gone Crypto. We get some really awesome people on the show, and we constantly, sometimes because of media and because of the shilling and because Bitcoin's up and down and it's doom or gloom, that feels like you've mentioned as the narrative, right? And that's all people focus on. But when you have interesting and intellectual conversations about the building side of things, then you're like, hold on a sec. What happens if banks actually adopt? What happens if they integrate systems to allow me to buy Bitcoin and they can set it? Like I go to my bank, I can buy gold online, right? I give my cash, they keep it for me. I don't physically have it. It's not the best way to do it, but I'm saying now there's another product that can be added into the back end system where now I can buy other things, assets online. And if I want to pull it out, I can, so it's fascinating. And it's you got to enjoy what you're doing. Otherwise, you'll quickly find your way out of it. So let's chat about the future of money, Hassan. Let's zoom, out for a few seconds. If we had to like fast forward 20 years from now, what does money actually look like to you?
Oh, wow. That's a really interesting question. Look, ultimately, money is a means to an end, right? It's a way to lead a rich life, the way that you define it. And today, I don't think anyone would raise their hands and say, "Hey, look, the current financial system that we have is the best we can ever do," right? Like that is just not true. And experience tells us that when we apply human ingenuity to a problem and we really sort of craft these things with care, we can make things better for ourselves. And the financial system has been in need for a dire upgrade for some time. Blockchains are inherently financial in that they help kind of move value around, and we are doing our best to upgrade the financial system with this new technological breakthrough. We're only 13 14 years in. If you look at like the evolution of the internet, it also kind of started out sort of plodding along, and then the exponentials tend to kick in a little later, but that it really sort of just transforms the whole thing. So when we think about like the construct of money, there's maybe a couple of kind of profound implications. So one is, what happens to the velocity of money when you take the cost of moving money to zero? And today, I don't think we fully appreciate how much hidden tax and hidden fees we pay, and hidden frictions that we have, when we just started to do very simple things. That's, why in some ways, like Venmo was just so profoundly ironic, in that we just made moving money domestically between friends easy, free, and fun. And the whole thing just exploded. It just, what we kind of scratched an itch on is that people just really were annoyed with their financial experiences at that time. And so, we helped like, 10 to 100x kind of the number of, P2P transactions that were going on. And so I think when you take that and you apply that kind of, globally, um, it is, I think, it is going to be really interesting, the new kinds of abundance that we're going to unearth, when the cost of moving money goes to zero. I think that the second, big thing that's happening here is sort of a counterweight to government money printing. Fiat, as an experiment, like we've seen we've seen this kind of, happen over the ages of what happens when you depeg fiat from some, underlying kind of instrument of value, and giving, federal reserves and governments kind of, full license to go print. It just, creates sort of these incentives, that like leads, countries and governments sort of down a certain road. So before Bitcoin, I think there just was not a way to opt out or to exit from that and to provide any kind of like check or balance, on that. So maybe it doesn't, happen so much in the US, out of the gate. But I think once governments sort of realize that the genie is out of the bottle and their citizens can access, whether it's USDC stablecoins or, Bitcoin, I'm hopeful, I'm optimistic that it will kind of create this sort of, natural force that makes governments think twice. That look, if I just keep devaluing my currency, the way it sort of happened like Turkey or like Sri Lanka or, many other kind of places, they will know that their citizens will just be able to kind of off ramp, and that social contract like doesn't work anymore. So I think those are the two things when I think maybe 20 years out, that I would love to see, these two things kind of work out like in the way that I'm optimistic about them.
Yeah. So, do you think people even realize that that they're using blockchain in the future, or will it just become like an invisible, infrastructure, kind of like the internet is now?
I do think it'll be abstracted in the background for the most part. The one where I still think that it has to be kind of part of the equation is self-custodial modes, where the whole point is that the trade-off is that if you want to own your asset, you have to take care of it. So that means whether it's your your seed phrase or whichever way that you get to kind of export that out and keep it in your control, and that means having good OPSEC around it as well. That's probably where I think that it just has to be, you have to have awareness and understand kind of what you're getting yourself into. But most of the custodial experiences and exchanges and trading experiences, I think are going to be pretty abstracted. Like even things like using Aave or Morpho or something for like yield generation. There's so much work being done on bringing that into kind of these familiar Web 2 type interfaces, where we can just even Coinbase, like we can generate like smart contract wallets for you, and then we can just help you kind of deploy that money, use some AI to put it in like the best place possible and maximize your returns. So some of that is actually kind of pulling into like what an easy experience looks like. So I think it'll go away for the most part. We won't have to think about it, but for self-custodial, I think we will, and that's okay.
Yeah, absolutely.
And in looking at everything that's happening in the markets right now and the industry, and drawing from, let's say, Coinbase 2026 pushing like base prediction markets, tokenization, real world assets. Do you feel that there's a silver bullet of innovation that could redefine money, or do you feel that there's a culmination of things that will shift and almost like a wave push the old out and bring in the new? Or do you feel that there's one single thing of innovation that could change it?
Yeah, what I see with, especially with financial services and financial type experiences, that it does tend to be incremental. Even if there's a true technology breakthrough, the adoption and the diffusion of that tends to take time, just because sometimes it's sort of bounded jurisdictionally. Stablecoins again. I can easily see it 10xing from here, and it'll be way more systematically important than even today. But that first 5 years or so, 6 years was a slog. It was even getting people to understand what it was, and now we're getting into the more sort of scale up and big boys distribution kind of phase. I think on the capital market side, again, like because it's so saddled by regulations, some of it are for very good reason, like investor protections are real, and that's why like the US has the deepest capital markets in the world, but it is a lot of arcana to wade through. So with tokenization, I do see that as like a transformative uplift. And I think where it will get really magical is when you will just do capital formation on chain. You will not even kind of need to do legacy, then put a wrapper, and then go on chain. Which ironically, I think will be close to like how we've seen ICOs, but just much more compliant. But that all of that takes time because you still have to kind of do the policy and regulatory hard work along with the product work, along with the kind of technology platform work as well.
We're in for the long haul.
Yeah. It's one of those like slowly and then all at once.
So a lot of our listeners are dads trying to build a better financial future for their families, and a lot of them are new to crypto, just getting in. What is the biggest mistake that you see a lot of new crypto investors making?
Yeah, and by the way, just on that note, I do want to sort of give a shout out to the Crypto Dads group in Singapore that I'm a part of. It's more folks who are like in the industry, and we have fun kind of degenning together.
Okay,
but it's a really cool community.
Awesome.
Shout out, guys.
Tell them to jump in with us here.
Yeah, that's right.
We're all just a bunch of dads. So,
and one of the things that's common for us is also thinking about like our legacy, our kids, and how sort of we're setting them up for the future. So many of us have like kind of bitcoins in trust for them for whenever they're older as well. But going back to for beginners and some common mistakes. So these are sort of some of the rules that I provide for folks who are dipping their feet. One is start slow and choose an onshore regulated trusted provider to go buy your first first crypto. There's no reason to kind of be like, oh, my buddy gave me this hot tip for a meme coin on my WhatsApp group, and I'm just gonna go YOLO and buy something that is probably going to rug. That's just how you get burned, and then you have like low NPS scores off of that. So start onshore. Right. Start with something that's trusted. The second is just buy either Bitcoin or USDC, and then start with a small amount. So especially if you're buying like Bitcoin or Ethereum or something, this is one of those like Mike Tyson things of everyone has a plan until they get punched in the face, and you are not going to know how you handle volatility until you actually feel it. So start with a bite size that you think that you can be okay with it if you lost a lot of it, and then you check your gut, like your literal gut, to see what happens. If you have a drawdown, or like if you have euphoria, if it goes up like 20%, if you're not used to these kinds of moves, this is something that you should take your time on. And then after that, my kind of final recommendation is you should think about like having a core portfolio of like my long hold assets, maybe my forever assets. And then if you have like a degen itch, you should have like a segregated active portfolio. Because I also find like once people come in, they start getting like a little antsy about, okay, well, this token moved this much, so I should go buy a little bit of that, or maybe this one dipped and it'll come back, and that's good. Like it's your money, you should do with it what you want. But having that mental separation of long-term assets and then active trading assets, as professional money managers do, I think goes a long way too.
Yeah,
that's excellent advice.
So do you have perhaps a strategy for, let's say, a new crypto dad comes into your mix and he's kind of new to the scene? Where would you send him to get educated on, information regarding the markets, or where to begin, or what to do in crypto?
Yeah, well, we're fortunate that we have a huge repository that we've built over the years, because we have millions of consumers and retail customers on our platform. And so we do get a lot of beginners. What we tend to do is, Coinbase has its own set of resources that we've really kind of honed over the years for just easy, simple to use explainer language for how to get started, and then also understanding like the risks that come with it. Along with that, I think if you want to get more deeper into the industry and sort of the philosophy around it, I did read like the Bitcoin Standard back in the day. I thought that was a good book. A16Z has a ton of great resources. I think a lot of the stuff that Chris Dixon puts out, I'll usually read. Balaji, who actually lives around Singapore, former CTO of Coinbase, his writing on X or his long form stuff is usually very excellent as well. So I think there's a bunch of different resources, that one can use. I would try to like pay attention to price action last, almost sort of deliberately, because it's also like the easiest. It's like the candy, that you can digest. But just getting yourself grounded in like some of these fundamentals, I think is great. And honestly, like in this day and age, just using Claude Chat or Chat GPT or something to just get yourself educated is also just an easy way to personalize.
Excellent. And just to wrap things up, if you could give one piece of insight to people that are thinking about the future of money, what would that be?
Well, as a techno optimist, I would say it's all going to be fine, even if sometimes it doesn't feel like it. I think being long on innovation and human ingenuity to solve big problems, I think that's a good bet to make. I do think that you have to make your own luck along the way as well. So as you think about the future of money, it is your responsibility to educate yourself of what exactly is going on and how to participate, whether it's on crypto or AI or some other innovation wave. But overall, like there's a committed group of people that are trying to make the system better, and we're very hopeful it'll all work out.
All right, Hassan, we're going to do a quick lightning round. How this round works is we're going to call out two scenarios, and then you're going to pick one as fast as possible. All right, so this is your personal preference. I'll start it off with the Bitcoin or Ethereum.
Oh, man. I'll take Bitcoin these days.
Excellent. How about cold storage or exchange custody?
I'm an exchange custody guy. I've lost some self-custodial wallets over the years.
I think we all have.
Yes, for sure.
Stablecoins or CBDCs?
Oh, that's easy. Stablecoins.
Absolutely. How about one crypto myth that needs to die?
Oh, wow. That crypto is not regulated.
Will Bitcoin hit $1 million someday?
Yes.
And one last one. What's your favorite Coinbase feature for somebody who's brand new to crypto?
My favorite feature is the recurring buy feature, where you can just set it in DCA.
Absolutely. I have both of my kids doing that now. My kids are adults, so so I've stopped giving them Bitcoin. Now they're buying their own.
They'll be buying for you someday.
Exactly.
All right, Hassan, this has been fascinating conversation, and it's clear that crypto isn't just about investing. It's about that financial system in itself is evolving, and we're excited to be in this space.
Absolutely. It's something that we love to explore on the show because as dads, we're not just thinking about next year, we're thinking about the next 20 years for our families.
Hassan, thank you very much for joining us on Dad's Gone Crypto, and we'd love to have you back when the space continues and it evolves and you have exciting new products that you guys are pushing into the market. And we do wish you continued success and building that Coinbase in Asia.
Amazing. That was a really fun conversation. Thanks for having me on, guys.
Thanks a lot. It's really been great having you. We'll see you.
Awesome.
Take care.
Ciao.
Cheers.
The material and information presented in this recording are for entertainment purposes only. Do not misconstrue what you hear as investment or trading advice. Always do your own research. The views, thoughts, and opinions expressed by the guests on this recording are their own and do not necessarily reflect those of Dad's Gone Crypto or its hosts.